Hey, it's Nick here, and you're on the Transparent FX Academy. I'm a top author on TradingView, and it's time to make another full market breakdown to see exactly what kind of opportunities we can be looking for on the period that we will be analyzing both from a technical and an order flow perspective. So without further ado, let's jump onto the charts. Okay, so today I want to speak about Euro USD, the most traded pair in the market. And the reason for which I want to break down Euro USD is because we are very near to having a good opportunity, obviously, to capitalize on Euro USD. So I want to create this full breakdown that, as usual, I will be keeping as educational as possible. So first, we will be speaking about the technical aspect of this market. So I will be breaking down the technicals for Euro USD. We will then go and see what we have from a commitment of traders perspective, which is what hedge funds are doing in the market. And obviously, if you're able to track and read how the COT data is moving and how hedge funds are shifting their positioning in time, you do have an advantage over your competition in the market. And by the end of the video, by using the combination of our technicals and order flow, we will be able to understand where are the best probabilities for the next move on Euro USD. So without further ado, let's get straight into the analysis. Now, starting here from the monthly time frame, what we can see is that the market has just provided a nice impulse to the upside, followed by this correction. Now, generally speaking, in the market, if you have an impulse and a correction, what you expect is for the market to then create a continuation to the upside, specifically for the creation of a higher high and completion of this impulse, correction, and impulse pattern to the upside. And in fact, that is exactly what the market did. The market just completed this impulse, correction, and impulse pattern to the upside and just printed a higher high. Now, generally speaking, once a market prints a high in the market, a high is an area of resistance at which the market has found resistance and from which the market has started a move to the downside. And currently, we consider the market has broken above this resistance. And as you know, in the market, there is a quite important rule, which is that if an area of resistance is broken to the upside at that point, the previous resistance is turned support. So what we can expect is for the market to retest this support and create a continuation to the upside. So from a monthly perspective, we are currently testing previous resistance, which is now turned support, from which we can expect the market to get rejected to the upside and to find some demand if the market will actually go and retest that zone. So on the monthly, everything looks quite bullish, but we do expect a short-term move to the downside to go and retest this demand before creating the continuation to the upside. One last thing that we can see here on the monthly is that we have just created a nice impulse. Now, generally speaking, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the impulse move itself. So from the low to the high of the impulse. And if we take our Fibonacci from the low to the high of the impulse, what we can see is that the market has just created a nice 50% retracement that is lining up exactly inside of the previous resistance, now turned support. So what the market has created is actually a confluence of support area inside of here, given by the 50% in combination and in confluence with the previous resistance turned support. So inside of here, we have quite strong liquidity. And if the market will go and retest this zone from here, we can expect the market to provide a rejection to the upside. So at the moment on the monthly, everything is quite bullish. But in the short term, we expect a last move to the downside before the move to the upside. Going down on the weekly time frame, what do we see? Now on the weekly time frame, we can see that the market has just broken weekly structure to the downside. Which structure am I speaking about? The structure that I'm speaking about is this previous resistance, which the market has broken to the upside, and at that point, previous resistance is turned support. And in fact, the market has just tested this previous resistance, now turned support, and rejected the zone to the upside. And currently, we are also testing the previous support, which is now turned resistance, from which we can definitely expect the market to provide a rejection to the downside. So at the moment, on the monthly, we expect a short-term move to the downside. On the weekly, we are testing previous weekly support, now turn resistance, from which we expect a move to the downside, which means that the monthly and weekly are currently in confluence and both showing a potential short-term move to the downside. Let's go down on the daily time frame and see what we have from a daily perspective. Now, going down on the daily time frame, first of all, I had spoken about EURUSD quite a few times in the past. I spoke about EURUSD after the market had provided this overextended W formation. I made a full breakdown when the market was here, explaining all the reasons for which from here we expected the market to create this move to the downside. In fact, that is exactly what the market did. Then I spoke about EURUSD again after this W formation, and I made a full breakdown explaining all the reasons for which from here we expected the market to create this move to the downside. And again, that is exactly what the market did. Then we had the creation of this M pattern, and when the market was here, I made another breakdown explaining all the reasons for which from here we expected the market to create this move to the upside. And again, that is exactly what the market did. And by the way, I will link in the description all this previous analysis. So you find all this previous analysis linked in description, so you can go and check it out for further reference and more free education. Hey, just a quick thing, make sure you comment below and you let me know which pairs or topics you would like me to analyze or cover in the next videos. But at the moment, what do we have and how we can be looking for the next opportunity on Euro USD? Now, here on the daily time frame, what we have is a market which is currently testing the previous daily support, which is now turned resistance. And also what we can see is that the market, after creating this impulse, has created a correction. Now, as I said earlier during this analysis, if you have an impulse in the market and you want to measure the correction, what you have to do is take your Fibonacci on the actual impulse leg. So in this case, from this high to this low. And if we take our Fibonacci from the high to the low, what we can see is that the market has retraced exactly to the 0.618 of the Fibonacci taken on this impulse, which is obviously the golden ratio, and is currently also rejecting the 50%, which is in perfect confluence with the previous support, now turn resistance. So all this zone is extremely strong resistance, actually confluence of resistance, from which we do expect the market to provide a rejection to the downside. So monthly, weekly, and daily are all showing a potential short-term move to the downside for the daily time frame to actually complete this impulse, correction, and impulse pattern to the downside. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds are currently doing in the market, what we can see is that with the last report, net positions have actually increased. We went from having 142.9k net positions all the way up to having 155k net positions, with 8.9k shorts getting closed and 3.9k longs getting opened. Therefore, the euro is starting to get strong again with 228k long positions and only 72k shorts. So this is obviously against our short-term move to the downside. So we have to be extra cautious if we are to be looking for potential shorting opportunities. But we have already seen on the monthly that the move to the downside would simply mean a short-term move to the downside to go and test the monthly demand and build up even more longs for the rejection to the upside. Plus, below this low, there are a lot of stop losses and a lot of liquidity that market makers could easily want to go and hunt. So we could easily see a short-term move to the downside to go and grab all this liquidity before the continuation to the upside. But anyway, we will be extra cautious when we are looking for a potential opportunity here on EURUSD with students. In fact, what we will be doing as usual is being reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data are the best timeframes for the direction of the market. But when it comes to confirmations and entries, the best time frame is the 4 hours. So what we will be doing with students is monitoring price action from a 4-hour perspective inside of this area. And what we will be doing is waiting for the market to shift from a 4-hour bullish market as we have right now to a 4-hour bearish market. And only if the market will shift from a 4-hour bullish to a 4-hour bearish market, only at that point we will be adding EURUSD to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities at that point for the move to the downside and for the market to complete this impulse correction and impulse pattern to the downside and create a lower low. If you made it this far in the video, it would be great if you can smash that like button and comment below. It really does support the channel and support the creation of more free education and analysis for all of you. But this is just the tip of the iceberg. I have a full mentorship program that will teach you exactly the rules of my rule-based strategies and also give you every single day a new market breakdown in which I show you exactly how to apply the strategies with entries, stops, and take profits, as well as answering every question that you have every single day, including the weekends. So it's a very complete program. It will teach you everything that you need to trade the market consistently. So I will see you in it. The link is in the description, or I will see you in the next video.